evening, everyone, and welcome back to Market Analysis from EliteSignals.com. Uh, we will, I will show you today my social website so that you can follow me and get some updates in the proper time without any delay. This is my first of all. This is my Twitter account, which is Elite Signals at Elite Signal, where you can follow me and see some free charts right there. And this is my YouTube channels, where we post the weekly updates and weekly outlook at this channel. And we have some courses right there, which is currently it is in Arabic, but I will make this course in the future in English, so that everybody can learn some information about elite strategy and my strategy for trading. And this is my website where you can join. We have some free signals, and we have subscription area for the members where they get signals only signals with a huge potential. I mean, it is high opportunity signals only. Some people want to join the website, and some people prefer to get free updates and free charts, and everyone can take some information either paid or for free. We will get started as usual with the dollar index. As I have shown you from the last week, we are expecting this. We are looking for the possibilities of the current. We are looking for the possibilities of the current pattern of the wave, where we hit this top at this area, then the price make a very clear ABC to the downside. And last week we had this simple ABC to the upside, and we have told you the market might see this correction as complete, but the price action right there telling we should have some more complex corrective structure at this area. So the possibilities of this wave, where we count all this wave movement to the downside as wave A, the possibilities of this wave to the upside in the form of A, B, C. So we have 3 legs for this correction. We have just made the first 2 legs to the downside, one to the upside, which is A, then B, and now we are gonna make another corrective leg to the upside in the form of C leg. We had some profits from the last week by shorting the dollar index, by shorting everything against the dollar index. But once we have seen this correction, okay, I will show you in larger picture so that you can learn how to track and make your trades based on the corrections. We have seen this is the first leg of correction to the upside. This is in the form of ABC. Then we have another ABC to the downside. As usual, as I have shown you and told you before, we do not predict the type of correction unless the price action gave us a clue about the corrective structure the price gonna made. At this area, once we have seen this ABC movement to the downside, we can draw. This is how this piece of correction is being traded. We draw the trend line. This is the trend line. This we draw the trend line for this piece of correction ABC. This is symbol ABC. And once we have a breakout of the price above the trend line, we can take our trades and starting to build our trades to the upside. So we should buy the dollar index very carefully. I mean very careful to take a short amount of positions and putting a tight stop loss and leaving the market as fast as possible. This is what I mean by trading very carefully. So we are expecting the price to make an ABC similar to this leg. So this is our first tick to the upside. So at this moment, we are expecting the price to make a similar leg for the dollar index, and it might be equal in length as well. So that the whole structure as a regular flat is complete at this area. So for this week, we are buying the dollar index, buying everything against the dollar, so that this whole structure for the dollar index is corrective structure is complete before the big move. So we are expecting a huge move to the downside after completing this structure. The possibilities of this structure to the corrective structure is either regular flat, or zigzag. So we might count 5 waves to this area, 1, 2, 3, 4, 5 to the upside, or we see ABC. So a regular flat is a must at this area. No running flat, neither expanded flat should be seen at this area. So we buy dollar index very carefully at this area. That's all about the dollar index. We go to the euro. The same thing, but in opposite direction. We have this leg to the upside, A, B, C. Then we have a corrective leg. This is A, B, C to the downside before the huge movement to the upper side regarding the euro. Same dollar index, but in opposite direction. Let me move to the pound. We have finished the first ABC legs for the pound to the upside. I will show you that. This is A, B, C. And if we draw the Fibonacci ratio between, I will put the numbers first so that everything is clear. This is A, this is B, and this is C. If we draw the Fibonacci ratio, we expected to see a corrective movement to the downside. This is where we have equality between leg A and C. Once we have an equal legs, the price started to correct to the downside. This is our reversal box, which is between equality 100 and 123.6, so that this is our reversal zone for the bond. At the moment, we are expecting the price. How we can trade wave B? This is whole A. How can we trade wave B? This is whole wave A. ABC. This is A. and now we are correcting to the downside. We have to trade this piece to the downside very careful, because the general direction of the bond is to the upside. How can we trade this thing to the downside? This is where Fibonacci ratio should be used, right there. So we are expecting the price to go down to either to 50% line or 61.8. So in this week, I'm expecting the price to reach this zone, which is about 1.2950 and 1.2880. This is the area we are expecting to see the bound going down to this area. So we have to be very careful once we are trading the markets, and some people are avoiding entering such trades, since trading high opportunity trades is very crucial in the market. This is A, so we are correcting to the downside. After we are finishing this corrective, the price gonna take off to the upside again. So be very careful once you take a sell position to the downside, and try to use Fibonacci ratio to enter and exit your trades. I will show you the gold. As we have shown you from the last video, we are expecting a bullish structure for gold to the upside. This is hole A, this is B, and this is C, where we have a big regular flat in the daily time frame. So we are bullish for the gold until we see 1,400 or even 1,500 for the gold. So I will go to lower time frames and show you some tricks so that you can make your trades. Your trades, as shown you, once you trade such a very bullish market, you have to trade with the trend, not taking opposite direction, so that you might be entrapped within your trades. So taking a bullish trades with the trend is something crucial in this market. Some people might take a short position from this area and telling me we have made some pips from gold. That's okay, but this will not happen every time. The price might take off anytime, and you will be ended with a huge loss. I think gold has reached the point of no return. I don't think the price going to reach this bottom again. This is a very solid bottom for the gold. As we told you in the last weeks, this is a regular flat. So again, if you insist to take short position regarding gold, you can also use Fibonacci ratio and Fibonacci lines to enter and exit your trades. I think the price is going to retrace between 50 and 61.8 for the price, around 1,300 and 1,290, 95. This is the area of reversal for this piece of correction. So if you take any shorts for the gold, try to be very careful. Try to be very careful, since we are not able to identify the corrective structure which will happen right there. So we are expecting a short correction to around 1,300 before the prices resumes the movement to the upside. This is regarding gold. Let me move to Turkish lira. Actually, we have sold the Turkish lira for 2 or 3 weeks, and it is moving in our direction, approaching the target. So any correction to the upside for the Turkish lira might be a good opportunity to sell the dollar against the Turkish lira again, so that we can complete this big contracting diagonal to the downside. Any movement to the upside is a good opportunity to sell the dollar against the Turkish lira. Regarding the Uzi, I will show you something regarding this count. We have this ABC to the downside, this ABC to the upside. So we are expecting to see another ABC to the downside. So we have to short the Turkish lira, the Uzi very carefully. We have to solve the Uzi very carefully, and I think this is the area of reversal for the Uzi, and it is possible that we might see another. The possibility is valid to see, for example, an expanded flat right there. It is possible to see. So once we see a leg similar to this leg, I will make it more clear. We are selling at the moment. We are selling the price until we see a piece of movement like this one. So this is we are expecting to see this type of movement to the downside. This type, so that the whole correction is complete, and then we will take off to the upper side again. This is the kiwi. It is very similar to the pound. So we are selling very carefully to the downside, so that we have two equal legs, not equal legs. Actually, it is not equal. We have to take this from this area to remove the spike, because the spike is movement is very fast. Sometimes we need to exclude this movement from our chart. We have this is A, B, C to the upside, but we could not make this A, B, C for a simple reason. This is whole A, this is B, and wave C is incomplete. 1, 2, 3, 4, 5. So we might see a correction to the downside like this before we start moving to the upside. This is wave A, B. Wave C is not at this place. This is I will not mention why, because it needs a lot of time to make this clear for you. Since we have ABC to the downside, to the upside, ABC to the downside, 1, 2, 3, 4, 5. So we have the wave should be ended with ABC, not 5 waves. I will make this more clear in the educational video. So at the moment, how can we trade this market? We are predicting to see a corrective structure to the downside. You can go short. You can go short very carefully, taking 20, 30, 40 pips from the market, and then exit quickly, because we are about to see a huge movement for the USD to the upside. Okay. This is the Dow Jones. Dow Jones has made a very nice 5 legs to the upside. This is 1, 2, 3, 4, and 5. We have shown you this this very beautiful this is very nice corrective structure appearing right there at this place. This ABC, which is a regular flat. So we have still a potential for movement to the upside. We might see retracement to this area before the price is started to move to the upside. So we are anticipating how can we make the targets for the, because we have exceeded equalities between legs, because we are about to see 5 waves, not 2 ABC correction. It is smart that we have to see this number, to see might the price go around 25,500, 25,500. So at the current price was, we see that the trend line for this regular flat has been pushed to the upside and making the price making a support for the price. So we can go with the trend and buying the Dow Jones for hundreds of pips before we have a very clear and strong signal for maybe 4,000, 1,000, or 2,000 pips moving to the upside. So patience is mandatory here, and we should show patience before our big movement to the upside regarding the Dow Jones. Let me move to the crude oil. As we have traded this piece of correction. This is a very high potential. Very high potential trades where we see ABC. This is in the form of running flat. This is in the form of running a flat, and at the current moment we are expecting the price to I will make it clear. As you see, we maybe have completed the movement to the upside. I will show you how to enter the market. We have ABC to the upside, ABC to the downside, and then we have to see another three legs leg to the upside. This is A, B, C. Once this movement to the upside is complete or not, okay. I think this movement is incomplete to the downside. You have to trade this trend line. This is a very important trend line for the price. You have to expect to see running flat right there. Once the price is started to move to the downside, to the upside from this area, you can go short. You can go along with the crude. Anyhow, the taking position for the crude oil at the current price is very risky, and you can avoid this market. You can avoid this market because since it is we have traded the high potential, we have traded high potential running flat, taking about 300 pips for this leg. We have traded this leg for the crude oil. I have entered from this place and to the upside. This is our leg high opportunity. It was a very high opportunity trade. At the current price, we have to show some patience so that everything is clear. But as I told you, ABC to the upside, ABC to the downside, then we have to see A, B, C. But I don't think this is A, this is B, and we have to see C. I don't think C has ended at this place because we might see another type of correction for wave B in the form of running or expanded flat. So we have to be very careful regarding this entry. We have to be very careful. Regarding we have a very high opportunity trades for the OZ. This is our impulse to the downside. We have very nice ABC, which is a regular flat for the OZ. Sorry, for the Swiss franc. Now we are expecting the price to make another leg equal to this leg. So this is a very high opportunity trade at the moment. And putting into our mind that the dollar index have to correct to the upside. So we are expecting a huge potential for the Swiss franc to go to the upside. Let me move into okay. This is the dollar yen. We have seen this. We have seen this very nice correction to the downside for the dollar yen. This is a very nice flag, and we have entered at this place. I have sent this signal to subscribers in the website. We were buyers from this place and targeting to higher values for the yen. So we are bullish for we have to trade this piece of pair to very carefully because we are going to see a very strong movement to the downside once we have the corrective ended for the dollar index. Okay, this is the CAD. I'm expecting the price to make another push to the downside actually, because the price should not end at this shape. It's ABC, ABC. Then we have to see an ABC to the upside before the price continue movement to the downside. This is very clear pair at the moment, but be careful. Once we have made another movement to the downside from this plate, this would be a very shallow. And don't close your orders, because it is a must that we have to make a correction to the upside before the big fall for the dollar index. That's all about markets. We are, as we see from the outlook, we are correcting for the dollar index to the upside. So we have to be very careful exiting for a small amount of pips, and putting a very tight stop loss to our trades, and uh, getting small amount of pips, and putting small values, small amount, not using very large orders, using small lots only to trade this week, because you are trading against the trend. Thank you, and bye bye.